Hello everybody, Saturday, 20th day of April, 2013, 5 different charts to go over, and I want to go over it relatively quick, but a lot of key information. I gave the levels of 2318 because it was from this high and the low right below it. Let me just make that a little bit bigger. So from this high to this low. What's interesting is it had that breakdown below, and then the Fibonacci from here to here, which has 2320 coinciding within it as a key level, has played out magnificently as far as how Fibonacci likes to play. You get major support here after it resisted it here with the higher low. Notice you make this higher high. There's a possible failed breakdown. There's a possible failed breakout. And now this area ends the day breaking down key support and resisting what was support in here. That's going to be interesting how this plays out. And because over the last little while, let me just expand this from the hourly chart to the 2-hour chart, having this big decline and going sideways, you can call us a bear flag. Obviously, this thing doesn't trade within the supply and demand of silver because, well, you can call it paper, electronic, digital, whatever you may, but it's not 100%, probably not even 4% silver, which gets you fraudulent prices. And, well, the thing about it is I think at some point there will be a reconnect of the supply and demand towards silver. And no matter what this does, whether it goes down to 16, 12, a penny, $1 trillion, 42, 37, 29, I don't care. As long as it's not properly done, you got to reset it and properly do it again. And to me, that means that if the understanding shows that, okay, it's down way too much, if I can pick me up some, this could work out to a good play. Well, then you're making a calculated gamble. Not all gambles are poor ones. In fact, some of them can be good ones. But the question is, have we seen the bottom again? We're seeing this demand really pick up because, well, in here, well, I was waiting. I want to break 26. Even 25 is so close to 26. That's not what I want. So at 24, 23, then I'll start getting it, and that's what's happened. We've had a whole week for people to think, okay, what do I want to do with silver prices in the mid-23s? And it's interesting to see that demand has been extremely high. I didn't think it would do anything like this, though, either. So we've had a lot of these sideways kind of moves over the last couple years. I'd be honest or dishonest if I was saying it's not much. It's whatever. But it's really getting irritating for the most part. But you know what the whole system is, so you just live with it anyway. This level here did not hit. The move was from 22 to 24. That's about almost 10%, about 9. And to me, that tells me, A, Fibonacci failed because it should have at least came closer. This is too big of a move. It also says weakness because, heck, why did we not at least come here, man? This thing is surely dropping short to midterm, which I think it's more likely that we break below 20 before we break above 26 at this stage. But again, 2640, 2650 even, because I do expect 26 to be resistance. Anyway, so now that that's the case, it could very easily continue to go lower. You don't know what these big bankers are capable of. After all, they're the ones that control the market when they have what percentage of the volume that can be done. This move can only have been done by central banker volume. So it's not like a surprise that it comes into play. Let's go to the third chart now, which is the 47-hour. Each one of these candles representing 47 hours worth of trading. Support line. Obviously, that's pretty clear, no matter how you draw it, but that's a pretty good one, too, which found support here. And then, of course, the big fall. It doesn't always have that big fall, but it did in here. Down, of course, to this lower band. Extreme sell-off. And this top, this key level, well, that was QE top. And I like using upper and lower bands, so since this top, you had the breakout, you tried to find support, you didn't, you resisted it, and that's all that has for history. Let's move on to the next chart, which is the 140-hour chart. Start with this running average from this $50 top, resisting it, breaking above it, finding support, breaking resistance, and then establishing a support level. That was the only time since the decline it looked like, okay, this thing looks good to go. I was a buyer in here because it looked to me as if this was a nice breakout point. Now, of course, failed breakouts and breakdowns are so common in the game, and that's exactly what occurred. So it breaks well below it. Well, we'll have another test of this line at some point, and that some point was here. It got above it, obviously, with this 37 top at the end of February 2012, but it didn't find support here for that long, and well, we'll have another test of it, but first we got this 26 test, and well, it didn't break that time, very easily could have, and then you go for another test in here, breaks above it, fails to find support, which isn't the worst of things, as long as it makes the higher low, and then has a nice challenge. Now, in a free market, because you have moved from here to here, that it's not uncommon for that to be that breakout point, but of course that's not the case. It resisted it to a higher low and it hasn't seen it since, so therefore there will be another test of this point at some point. The indicator that you're looking for is a break of this line to some level, come back, find a resistance establishment, and then have a clear breakout of that level. That's what I'd be looking for. Final chart. This will be the chart of the last 325, well, each period being 325 hours, thus 32,500 trading hours since early 2008. The running average since the $8 and I got 54 cents, but the $8.50 low. You have a little bit of support in here. It breaks away from it, finds support. It hasn't seen it since. It was close here. Well, until now it's seen it. So you've had a long period of time without having a test of this running average, but now we have. Okay, interesting. But it's had a big break below it, so isn't that scary? Well, it could be, because if a key area of support or resistance is not tested or not there, and it could oftentimes have major large volatility towards the movement or direction it's going. So in this case, boom, something like that. But it also is not uncommon when you have such a high volatile movement and a fear level that you have to have big capitulations. But oftentimes that is accompanied later on by fast movements up, and in this case it's back to the 26 to the 28.30 range. If that happens, of course. Maybe that fast move is down to here, and then it capitulates back to moves back to 26 from the capitulation, and then stabilize in that area before breaking. That's another possibility. But what's interesting is, again, you weren't having as many buyers in here as you normally would have, and maybe people didn't want to buy in the 26, 27, 8 here because, well, you can just see cheaper movements, and they got on the bandwagon in the 22 to 24 range, but not everybody did, me being one of them. For I have expectations of this going to the high teens, low 20s. Now, 22 is technically low 20s, but that was just too high for me to jump in. Now, I was expecting back in here that a movement down to here would result that once it gets here, you're now at the stages where it's a stock. Basically, what we're seeing now, I would have expected at 21.20. So that's showing me that the demand is higher than I have been expecting. Now, the demand is high for a small percentage of the people. If medium or even a double, if the percentage of small is 2, 3, 4 times higher, still low but not as small, goes from extreme demand to large demand or moderate demand, well, that's all over. That's why you can say all you want that they're still available. Well, of course they're still available. But that, again, that's the early stages of what a disconnect cycle would normally look like. And if the prices remain suppressed below 30, then watch out. That's all I'm going to say. To me, I don't see how this thing can stay below it without a bomb exploding. In another word, and I hate to use the word bomb exploding with what's been going on, but then again, that's yet another story in itself. Okay, so that's it. How long was this video? Yep, 10 minutes and change. Thank you for tuning in, and have yourself a great weekend and week. Bye-bye.